Well, we had day 3 trading the live account with Tick Trader funded account. Of course, we are scalping the S&P 500 futures using a semi-automated trading strategy called Polarity ATI. Polarity ATI is a plugin from a third party that you could purchase for NinjaTrader, and it makes a certain style of trading semi-automated. So what it does is it actually executes the trades for me automatically. And with that, I have the strategy for profit and target. So all I do is I tell the system when to look for the specific trades. And that is the most important part of the strategy itself, is when to arm it and when to not arm it. Right now, I am looking for a short trade in a discretion in the regression mode. That means that I am looking for a long signal. So typical long signal is a 3-stack buying imbalance, and the imbalances on a footprint chart here get highlighted by the blue or the orange numbers on the left and right. These are regular candles, but this is a range chart, so all the candles are the same size. But here what we are looking for a short trade for a very specific reason. There's a reason why I didn't have it armed here, but there's a reason why I have it armed there. And I'll show you guys this on a tick chart later on. But we have the 3 stacked imbalances, the blue numbers, and there was 3 of them. Now there's only 1, and then eventually when the candle fully finishes, see, now they're gone. But for a split second, 3 of them were there, and that's a trading signal. And typically in the past, this would be a buy signal, but I realized that for me, it works better to go in reverse. And last week, Polarity ATI came out with the update to be able to take the trades in reverse. All right. And there's a specific reason for that. And here is a 16 tick profit target. So that's 4 points on the ES using 2 contracts. And it's going to be a simple $400 winner right off the bat, starting the day nice and green, starting the new month, starting the new week. So it's a good feeling, and we are up $400. Now let's jump into trade number 2. Trade number 2 is very simple, but this one's a continuation trade. So we are actually looking for a long trade based on the trend, the upper trend of the market. So the market is moving up. We had more time to analyze that. We already had a half hour of the market open. It definitely trapped some shorts. We had some news come out about 5 minutes ago, actually. So let me just pause this for a second so you guys could see. If you're not familiar with range charts, they're not based on time. They're based on the range of the market. And since we had some news that came out, a CPI report at 10 a.m., this is 10 a.m. right here underneath my camera here. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 12 or 13 candles formed in 1 minute. So you can imagine how volatile that is. And the range is basically 15 ticks, which is almost 4 points. So every 4 points the ES moves, a new candle will be formed. So if you are trading stocks, imagine the stock is at $10. The candle opens at 10. The next candle will open if the stock reaches 1050 or 950. And then new candle will open. And then if it opened at 950, now the price has to get up to $10 or back down to $9, and then new candle will form. So the more volatile the market is, the faster the candles will form, and the less volatile the market is, the slower the candles will form. And that's how the range chart works. But again, I am using other time frames as well. All right, so this is the second trade here, but again, looking for a pullback entry and go along with the trend of the market, the overall trend. I am using channels and different things. All right, and then plus that report that we had spiked up the volume, spiked up the volatility a little bit. So I felt very confident with this trade because we had a lot of room to the upside, and the market went much higher than this later on. But again, looking for a short trigger, so short stacked imbalance, and we still get filled long because we have the regression. Okay, so there was the sellers were here, and sometimes you would have it armed the wrong way and you would lose, you know. So that's the thing, it's all discretionary, but just the discretion and the analysis is correct, and then that's what determines a winner or a loss. So it's not really the bot itself. The bot, you could have armed it, you know, in different direction. You could have armed it, you know, with a trend. So there's different ways to arm the system. There's 4 different ways that you could go about it, or even 5, because you could arm it both ways, and you know, it will have different results. So it's all discretionary. So we are up $800, 2-0 on the day, and pretty straightforward so far. Only half hour into the morning, and we could call it a day here, but we decided to take another trade. And what I did was I scaled down to just one contract. So let's go over that. You could see that I'm changing the strategy here to just one contract. All right, so there's a couple things going on here. So the market moved up a lot since the last price point. It's been about half hour since then as well. Now I'm going to look for a reversal to the short side, even though the market's going up. But there's a lot of key things that are happening right here. Number one, if you're familiar with deltas and footprints, this is called delta divergence. So on the bottom here, we have the sum of the buyers and sellers. So these candles are showing you the buyers and sellers. And on the bottom is basically the sum of them. So if it's green, or in this case, whatever that's bluish, greenish, that means there's more buyers than sellers in this candle on the market side. So this is not showing you everyone, but showing you the aggressive buyers and sellers. So people that are hitting the market. Okay, they're not waiting on the limit. And the candle closed red. However, we had more buyers. That means there's someone absorbing and selling up here. Okay. And then second thing is, look at the amount of buyers here. I mean, huge, 4,000, almost 5,000 more contracts to the long side, and the price barely went up. I mean, it went up, but not significantly, you know, because look at the volume in this candle here. That means there was someone there selling. So here I was confident to take a short trade in the same direction as before. So basically arming along with regression. And the reason for that is, people will ask, why don't you just arm it short with trend? Because if I click this, when this is a recording, but if I click this, it will turn regression into trend. And then when I arm it short, it will look for the imbalances on the left side and it will trigger me short. So I'll get filled like on the bottom of this candle possibly. And then, you know, the price pulls back and I get stopped out and then eventually it comes back. So now I'm getting in more so on pullbacks than chasing the price. And that makes it more, I guess, comfortable for me, and the win rate is pretty good. So we are now at 23 wins and 3 losses since I started using this regression mode, and I passed the trading combine in one single day, going 14-1 using 3 contracts. And ever since then, last 3 days, we've been pretty profitable. We had 2 losses, and I forget the exact stats. Tomorrow's review, I'll count only the ones with the live account. I will not count the ones from the with the combine. All right, but this trade I screwed up. So that's another thing I want to talk about. Every day I've done this over the last 4 days, I get in away of a trade. So with this being an issue over and over again, I got to figure it out. But why did I do it? Well, number one is, you could see right there, I get in the way of the trade. Took a while, but as soon as I get out, it ends up working. All right, it ends up working. And what is the difference now? So now I'm up 812 on the day instead of being up 1,000. And now instead of being able to continue trading, because my rule says that if I am up over 2 wins on the day, I could keep trading. However, if I take a loss, I am done for the day. So I would have won on this trade, and I would have been able to continue trading. And maybe you win 1-2 more trades, and now your day is like 1,400, maybe 1,600. It's a big difference. However, I was so frustrated with myself for letting me get in the way of another winning trade, because I never get in the way of a losing trade, but I always get in the way of a winning trade. And right there was an easy win, and I let it kind of get to me, and I stopped trading for the day. Also, arming it short with trend. This is a trigger right here. So you would get triggered here, and 65, I guess, would have been the fill. And the price bounces right back up. And this is why I don't want to chase the price. I want to have the price short on the bounce. It gives me higher odds of winning. And yeah, just to kind of give you guys a clear reasoning why I do the things I do, because I know it could be confusing, because I wasn't armed here, but if I was armed short here with regression, this is a trigger to go long. So I would have been filled long, and I still would have won on this trade. So there's a reason why I trade this way, and then there is a reason why I have a much higher win rate, even though it doesn't make sense for a lot of people, because when you Google how to trade stacked imbalances every time. It says when there's a seller's imbalance to go long, to go short, and when there's a buyer's imbalance to go long. And I'm doing the reverse, and it's working for me. Obviously, it's only been 3 days, so I don't want to get ahead of myself. Well, technically 4 days. Don't want to get ahead of myself. This is why I'm trading on a funded account and not on my real account. Trading this system, the Polarity ATI on my real account did not go well at all. And hopefully I could recoup those losses with this funded account. We have to trade for 40 trading days to be able to withdraw with Tick Trader, which is okay. This is how we build consistency. We are up now 2,100 on this account. So we have 37 or 36 more days to go. And obviously once we get closer to like, within 10 days, I'll trade smaller or whatever to make sure we get that withdrawal. And we'll see how it goes. But yeah, make sure you guys hit that like, hit that subscribe if you're new. If you're interested in Polarity ATI or any questions, leave a comment down below or join our Discord as well. It's free to join. And we have a lot of discussion there. Over like 160 people now joined us. So it's fun. And yeah, any questions you have in there, just let me know. The only thing is, like, we do ask you to kind of do your own homework. Polarity ATI has a few videos on YouTube to learn from. And we'll be more than help to kind of assist you with further questions and whatever else you might have, because it's confusing at first. All right. Peace out, guys. Have a good night, and I'll talk to you tomorrow.